Hello everyone, welcome to the market opening bell for Monday, March 10th. Hong Kong stocks showed mixed performance last Friday. The Hang Seng Index opened 187 points lower, dropping 304 points in the early session to 24,065 before climbing back. In the afternoon, it surged as much as 299 points to 24,669, hitting a three-year high, but closed at 24,231, down 138 points or 0.6%. The H-share index fell 24 points or 0.3%, closing at 8,914. The Hang Seng Tech Index dropped 31 points or 0.5%, closing at 6,037. The total market turnover for the day was 383.1 billion Hong Kong dollars. For the week, the Hang Seng Index and H-share Index rose 5.6% and 5.9% respectively, both marking their largest weekly gains in 3 weeks. The tech index climbed 8.4% over the week, its biggest increase in 4 weeks. As for the Shanghai and Shenzhen markets, the Shanghai Composite Index approached 3,400 last Friday, peaking at 3,390 and closing at 3,372, up 1.6% for the week. The Shenzhen Component Index neared 11,000, hitting a high of 10,931 and closing at 10,843, up 2.2% for the week. The National Committee of the Chinese People's Political Consultative Conference and the National People's Congress will conclude today and tomorrow respectively, signaling a potential pause in policy tailwinds. Market focus will now shift back to economic data and corporate earnings. On Sunday, China's National Bureau of Statistics reported that the February Consumer Price Index fell 0.7% year-on-year, the first annual decline since February 2024, and dropped 0.2% month-on-month, below the expected 0.1% decline, raising concerns about whether the mainland is slipping into deflation. Additionally, the February Producer Price Index fell 2.2% year-on-year and 0.1% month-on-month, with both declines narrowing by 0.1 percentage points compared to January. On the trade front, China customs data show that in US dollar terms, total imports and exports for the first 2 months of the year dropped 2.4%, with exports growing 2.3%, less than half the expected 5%, while imports fell 8.4%, underscoring the significant pressure Trump's tariff policies are placing on Chinese exports. On the corporate earnings front, Wharf Real Estate Investment and Leapmotor will release their 2024 annual results today. Wharf Real Estate reported a loss of 1.05 billion Hong Kong dollars in the first half of 2024, swinging from a profit the previous year, with its interim dividend cut by about 4.5% year-on-year. Leapmotor's earlier profit forecast indicated it achieved a net profit in the fourth quarter of 2024, meeting its goal of quarterly profitability a year ahead of schedule. U.S. Federal Chair Jerome Powell said last Friday that the economy remains in good shape and U.S. stocks rebounded from losses. The Dow Jones Industrial Average closed at 42,801, up 222 points or 0.5%. The S&P 500 closed at 5,770, up 31 points or 0.55%, and the Nasdaq closed at 18,196, up 126 points or 0.7%. For the week, however, the Dow, S&P 500 and Nasdaq fell 2.4%, 3.1% and 3.45% respectively. That said, Trump's tariff policy seems to change daily. Just one day after granting Canada a 1 month tariff reprieve, he announced new tariffs on Canadian lumber and dairy products, potentially imposing a 250% retaliatory tariff on Canadian dairy. Consequently, Powell noted last Friday that the Trump administration is implementing significant policy changes in four key areas, namely trade, immigration, fiscal policy, and regulation. He indicated that the Fed would not rush to cut rates until there's greater clarity on how Trump's policies will impact the economy. On the economic data front, February non-farm payrolls rose to 151,000, an acceleration from January's downwardly revised 125,000, while the unemployment rate edged up slightly to 4.1%. However, rising uncertainty from trade policies and significant layoffs in the US federal government could begin to affect the labor market in the coming months. Today's stock pick is Simcere Pharmaceutical Group, stock ticker 2096. Simcere Pharmaceutical Group is an innovation and R&D driven pharmaceutical company with capabilities in research and development, production and specialized marketing. The company focuses on key areas including oncology, neurology, autoimmune diseases and anti-infectives, while proactively exploring future disease areas with significant clinical needs. Within its focus areas, the group has successfully launched seven innovative drugs for sale. As of June 30, 2024, 14 of its products have been included in guidelines and pathways issued by over 100 government institutions or authoritative professional associations, and more than 40 products have been listed in the National Reimbursement Drug List. The group places great emphasis on building its innovative drug R&D capabilities, with research and innovation centers established in Shanghai, Nanjing, Beijing, Boston, and Hong Kong. It has also set up a national key laboratory for neurology and oncology drug development. The group's R&D system covers the entire process from drug discovery and preclinical development to clinical trials and registration, and boasts leading platforms in protein engineering, multi-specific antibodies, TCE antibody drug conjugates, AI-assisted molecular generation, and protein degradation. As of June 30, 2024, the group had a pipeline of over 60 innovative drug projects under development, spanning various forms such as monoclonal antibodies, bispecific antibodies, multispecific antibodies, fusion proteins, antibody drug conjugates, and small molecule drugs. Additionally, the group has a nationwide marketing network covering 32 provinces, municipalities, and autonomous regions in China. Its products reach over 3,000 tertiary hospitals, approximately 17,000 other hospitals and medical institutions, and more than 200 large national or regional chain pharmacies across the country. In terms of production capacity, the group operates six drug manufacturing bases that comply with China's GMP standards, with some production lines having passed EU GMP certification or inspections by the US Food and Drug Administration. The group recently issued a profit forecast, expecting to record revenue of 6.62 billion yuan to 6.65 billion yuan for the 2024 fiscal year, representing a year-on-year increase of approximately 0.2% to 0.6%. Profit attributable to shareholders is projected to be between 718 million yuan and 748 million yuan, a year-on-year increase of about 0.4% to 4.6%. Adjusted profit attributable to shareholders is expected to range from 1.003 billion yuan to 1.033 billion yuan, reflecting a significant year-on-year increase of 39.5% to 43.7%, primarily driven by higher proportion of innovative drug revenue contributing to a rise in gross profit. The recommended buy price is 7.7 Hong Kong dollars, with a target price of 8.5 Hong Kong dollars and a stop loss level at 7.3 Hong Kong dollars. I do not personally hold the aforementioned stock.